Okay, welcome guys, PriceIsKing.com. Make sure you hit that like and subscribe. Today we're going to be talking about swing trading stocks, what to do, simple strategy I'm going to show you. I do go more in depth into my course, all the details about swing trading. Make sure to look out for the membership options. I'm going to be having 15, shameless plug right here, 15 different hours. I'm sorry, not 15 different hours. It's going to be $15 per year, and you're going to have 20 hours worth of training. That includes swing trading, day trading, forex, all sorts of strategies for trading stocks, futures. I'm going to be talking about that, as well as just fundamental stuff as well. So just keep a look at that. Make sure you hit that join and get access to all those videos. But let's get right into swing trading stocks specifically. There's more details. What I'm going to be talking about in this video, I'm going to make it short, make it quick, maybe like less than 10 minutes. And what we'll try to do is we'll try to get into what you need to do for swing trading. And this kind of applies to not just stocks, but it applies to ETFs, it applies to futures. For the most part, it's a very simple strategy. It's something that anybody could implement in any chart, any platform that you use. So as long as you know where to get some of these indicators on your charts. One of the other things that you have to keep in mind is all of these indicators, majority of them are lagging indicators. That means they're not going to predict immediately based on what you see on the charts. They're based on performance in the past 9 days, 10 days, whatever it is, whatever setting that you have, those are the settings that it looks back in the last X amount of period. Okay, so just keep that in mind, that it's not going to immediately give you an indication, but it can give you a general guidance as to where the stock may be headed towards, right? And what it's been doing in the past X days, or X amount of times, right? And so from that you can take that and kind of predict as to where it's gonna go, right? And so I'm going to show you in this video a quick breakdown of what I do when it comes to swing trading and stuff. It's worked really well for me. You just have to be patient and not be very adamant about it, because there's every indication will have, no trade is perfect trade, right? But at the same time, you want to make sure you have your risks in place, so that if it does go against the norm from an indication perspective, then you have your risks in place, right? Keep that in mind. And so let's get started, and we're going to do a couple of stocks, right? And I'll tell you what to look for and what settings to put in, and kind of take it from there, and you can look at it. Okay, so first thing first, I always have a 200-day moving average and a 50-day moving average. Okay, and what that is basically what you see on the screen right here, the orange, the mustard looking dot, and then the blue. Those are my 50-day and the 200-day moving averages. Okay, so let me actually see if I can zoom in. Why can't I zoom in? Let me zoom in real quick. Here we go. And one of the main thing is you want to look at is you want to take a step back. Okay, swing trading is all about taking a step back. It's not intraday trading, where you're not trading on the 5-minute charts, you're not trading on the 10 minutes, you're not trading 15 hour. Maybe you could do 4 hours, and then maybe an hourly chart, 4-hour chart, but those are still somewhat of intraday trading, candlestick settings, right? What I generally look at is anything greater than 4 hours, anything greater, generally I like to look at daily candles. Okay, either daily or weeklies. Those are swing trading. Okay, so anytime you're holding it for more than a day, you're swing trading. Okay, anything under a day within the market hours, you're intraday trading. Okay, that's considered day trading. And there's also rules behind day trading, right? And when you're in and out and you have certain number of balance on your account, you're 25,000 and under, and you're doing multiple trades, you're going to get flagged as a pattern day trader, and you need to follow some certain rules. closed, right? And so say, for example, you don't have $25,000 in your account and you need to swing trade because of certain rules that you have to follow, right? Every broker has these rules and you need to follow them. And so with swing trading, you're going to be holding it for multiple days, and there's clearing periods, and you're going to be not only holding it for multiple days, but you could be holding it for maybe a week or 2 or 3 or maybe even a month, right? You may not be in front of a computer every day, or you're not going to have your platform on your mobile device where you can trade anytime, anywhere you want. Certainly majority of the platforms already have that capability, but you're just maybe a doctor, or you may be an engineer or something, or maybe you travel a lot and you're always on flights and you can't trade while the market is whatever the case may be, right? And you need to focus on getting in a position, and then a couple of weeks later exit the position based on your readings, right? And so 200-day, 50-day is what I have on the charts. Okay, you can have the Bollinger Bands, but generally what happens is Bollinger Bands give you a good guidance on where things are. Like in the past few days, you can see that it's riding the upper Bollinger Band, and then you think that it's going to come down, but it generally doesn't come down like the way you want it to, and it's gravitating continually towards the up, right? So there's some nuances to Bollinger Bands, but it certainly does play nicely. Like over here in this case, you were riding touch, and then boom, splat down to the mid, touch, splat back down to the middle, touch the upper, crossed over the upper, and then came back down to the middle. Same thing on the bottom side, right? Like it'll touch the bottom, it'll try to gravitate towards the bottom, and then it'll gravitate to the mid band, and then try to hold in, go back up to the upper band, and then go back to the mid, the lower band. As you can see over here, the lower band's being ridden, and then once you see that it's off of it, then it's up for the hills, right? And so you'll see those patterns, and you want to be able to take that. So what I want to focus first on is the 200-day and the 50-day. So whenever the 200-day crosses, right, when the 50-day crosses the 200-day, when it crosses above the 200-day, simple strategy, whenever it crosses above the 200-day, the momentum has shifted. The stock or future or whatever you're trading is on a path upwards. And as you can see, like it actually started doing that before it actually crossed. So what ends up happening is, because it's a lagging indicator, you're never going to be able to like, oh, okay, it's going to be it's going to cross right here or whatnot. It's always going to be a few days behind or whatnot, which is fine, because what we want to do is we don't want to catch it up here. We want to be able to have a downturn, have some sort of selling pressure. And in this example, that happened maybe a week later. And this is where you get in. You would actually get in on a long over here, because this 50-day has increased over 200, and it still continues to increase. And this would be an opportunity to go long. Now, where else could you actually look? Like, you want not just one indicator, right? You don't want to always rely on one indicator. You would actually have other indicators that you can actually use. Many people use different types of indicators. What I'd like to do is I like to follow the MACD and the RSI. So in this case, I'd like to take a look over here and see what happened, right? If you had missed this, you can certainly catch it the next day or so, or the next downturn, right? You may have missed it, which is fine, perfectly fine, right? You always look for other opportunities. But when you do miss it, and you see that it's continuously riding up and up and up, anytime you see a chance to get in, because this indication tells me that it's going to continue, the longs are favored, right? Whenever the 50 is above the 200, longs are favored. Same thing on the RSI. You see that it was on a downward trend, and then the next day it took off, and that's probably because of the earnings, right? That's one of those one-off things, but generally that's the guideline. And then what happens is, anytime you see a downward turn and it touches the 50-day, and as long as the 200-day is very far away, anytime you see something like that, there's always opportunity for getting in longs, right? This is where it gives you a chance to get in. And as you can see, what happened was it went up, 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 up. Then you had the earnings report, right? The earnings report, maybe it may not have been good, so it went down, down, down. And then you had dividends, right? That day that the dividend happened, certainly it went down, but you know what happened? The Bollinger Band, the lower Bollinger Band, the Bollinger Band, the lower Bollinger Band held it in, right? And that would have been a great opportunity to actually look at it. And then you can, once you identify these type of candles, right? What are they? You know, whether they're doji candles or hammers and whatnot, right? You can, once you get yourself familiar, and I have a lot of that information in my training, you can actually identify, okay, maybe this is a great spot. You've also see on the MACD that this mountain is slowly dying down, and it kind of a good indication. Right. One of the other things between the three things, right? Obviously, I told you the MACD, the RSI, and then the Bollinger Bands, and the 50-day and 200-day. But one of the things that you want to focus on is, you see these lines, and there's a whole course and video on MACD, and I explain to you what all these lines mean. But what I look for is, I tend not to short stocks. Okay? I always long stocks. I don't really short stocks because, of whatever reason, right? I just don't like shorting stocks. I always, if it's a good stock, I'm going to go long, right? And the way I do it is, if I see these two crossing the zero line, I'm not going to go for a long, okay? And when that happens, you know that this will stay underneath the zero line for several days. And I don't know whether it's going to be several days or a week or two or whatnot, but I know that once it crossed, then the shorts are in favor, right? That's a second indication to me that, okay, look, it's below the 50-day. There's a possibility of may cross, or a possibility of some downward pressure. I'm looking at the MACD, right? I'm seeing that it's on the negative territory, meaning shorts are in favor, so I'm not going to go for a long. Okay, and then the same thing on the RSI. You'll see lower lows being formed, and then I would not go for a long, right? I'll just stay on the sidelines. If you're short, that's a great opportunity for you short. If you are, allowed to short in your accounts, then this is an opportunity for you short. And then where I would look at to go long on a swing trade would be when these crosses happen, right? You see where the green candle starts to form. You saw that there's a cross, right? And then you started seeing the higher lows being formed, okay? So when that happens, I see that the longs are back in favor. And I noticed that this never crossed, all right? So the longs are still in favor. And then if you know a stock, like for example Microsoft, it is a strong stock. So with that said, like it doesn't matter any downward pressure, and you see these crosses, that means it's time to get in on a long. So you could have gotten on a long here, even when this went down to here. That would have been an opportunity for long because you started seeing this. And what the other indication that I look at is, you see this red mountain, negative mountain. It's actually smaller than the previous, so it never reached the previous low. That means that the bears have weakened and the bulls are in control from here to here. That's what I see. And then this would be a great opportunity for going long. And if you were in a long at the 309 areas, 310 areas, even maybe you missed it a couple of days, 313, look where it's at right now, 384. And I had even mentioned this, if you watch my videos, that hey, this was a great opportunity. You would have made $70 on this stock. Okay, and then again, when you're way high up here and you're looking for a long, you wouldn't buy the stock over here when it crossed, right? You would actually wait for an opportunity, maybe down around here, or what you would do is you would look for opportunities where now it seems to me from the previous mountain, this red mountain, the bears are in control for the time being. All right, see this mountain versus this mountain, it's a lot bigger than the previous mountain, so bears are definitely in control. and there's a possibility of it coming down further. Okay, that's just one stock. Let me pick another one. Give me another stock. AMD possibly. All right, so let's take a look at AMD. Similar situation. Not similar situation, but look, let's take a look. I'm always on a daily chart. We got the 50-day above the 200, showing some positive, continues to go up. Right? What happened? Like if you were here, you had double bottoms, good indication. You were still above the 50 days above the 200, right? You had a cross right here, which was a great sign, and it's on its upward pressure, right? When that happens, it crossed the zero line right here. That means bulls are in control. I'm going to get in on a long. Right here, this indication right here, this cross, the price crossed back above the 200 and above the 50-day. So this would have been a great area, especially when you saw this cross, to get in on a long. So that's where you would actually enter. All right, this is just an example, simple strategy. Let me know your thoughts. If you want to, ask me a question about this simple strategy, anybody can employ this strategy on a swing trade. PriceIsKing.com. Leave your comments. Look for my course, and make sure you join the membership, because that will give you access for a little less $15 a year. To give you access to the 20-hour plus videos and training on various different indicators, strategies, futures, forex, gold, everything. Right? We talk about a little bit of everything. PriceIsKing.com. Thank you for watching. Like and subscribe.